Good day, my name is Christel from Frans, Klerk, Independent Technical Analyst. JB News wanted us to kick off with Blue Label Telecoms. And JB, there is a beautiful inverse head and shoulder with my left shoulder, massive head, and a right shoulder. And we can see that that neckline has now been confirmed, that weighted at 3 Rand 38. And when that neckline changed into a support, this inverse head and shoulder formation was confirmed. Now the big question is, what is the target of the formation? And I'm going to take the conservative target, which is my right shoulder, and if we project that length upwards from where the neckline confirmed the formation, it means that the conservative target for this inverse head and shoulder formation is 4 Rand 16. If I take the full length of the head and shoulder formation and I project it upwards, it means Blue Labels can go to 5 Rand 25, assuming the full formation play out. Remember, it doesn't mean that the full formation has to play out. It's just a forecast of where it can go. Now, very important, my 40-week moving average is a support, and that is very positive because if we look back at the history, we can see that here in this band in April, June, July 2019, it tested my 40-week couple of times, could not change it into a support and continued to the downside. And the same was in this year, in the week of the 27th of January, Blue Labels tried to test that 40-week, could not find enough buyers and just continued to the downside. But things have changed here in June, the first week of June, when for the first time since, and if we want to go back, we'll see it is the first time since August 2017 that Blue Labels Telecoms have managed to change that 40-week moving average into a support. And more importantly, the second confirmation was when the share pulled back and kept the 40-week moving average as support, because that tells us that there's enough buyers to keep the long-term sentiment towards Blue Labels to telecoms, and that was very, very positive. Unfortunately, my stochastic indicator, that is my overbought or oversold gauge, is already overbought, which means the share probably will pull back first as traders or investors take profit after the rally. But at the right time, when my indicator is oversold again, you can either add to the position or get back in. The big question is, or the big thing is, sometimes when a share has been this hit, the hard hit, that sometimes it takes a while, or sometimes it just quickly turns around, does not even give a pullback, and it has to become a chase of momentum rather than buying based on the indicators. I would only be concerned about Blue Label Telecoms when it starts to consolidate below 2 Rand 65 again, which is obviously where that 40-week moving average is waiting. Brian wanted us to look at MTN. Now, the share found beautiful support here in that week of the 23rd of March, and a rising channel was confirmed. Now, a rising channel is a negative formation because we know once that lower band of the channel changes into a resistance, it means that the instrument can first retrace. Now, at the moment, my MTN graph is almost oversold. My stochastic is sitting there on a 21.6. And more importantly, my two lines within my stochastic is still pointing downwards. So the ideal is to wait for it to become heavily oversold below a 20 or a 10, and then wait for the positive divergence for the two lines within my indicator to turn around. Combine that with a turnaround candle, and that might be the story that we are waiting for. So, this week's candle is not finished yet, but we're up already 4.6%. That candle will only be finished by Friday's close. Why? Because this is a weekly graph. And then, assuming that the share continue to find buyers and interesting participants in the share price, we might be sitting here with a cup and handle formation. Now, my first confirmation of short-term optimism will be about 58 Rand and 9 cents. I will be concerned about MTN when these support levels at 51 Rand 26 changes into a resistance again. So my cup and handle formation will only be confirmed when 69 Rand 13 changes into a support. And that is where my confirmation is. But by that time, my stochastic indicator might already be overbought or high enough that I don't want to get in. So first point of entry would be 58 Rand and 9 cents. And then my 40-week moving average is a critical level. We can see MTN tried and tested it here in the week of the 11th of August, 17th of August, and the 24th of August, but it couldn't find enough buyers to lift it through that 40-week moving average. If MTN can find enough buyers to lift it through that 61.49, the bell will ring that the long-term sentiment towards MTN is positive. Important and very exciting, there's a gap on the weekly graph on MTN, a window that at some stage have to close. It can take days, months, weeks, years, but the window is closing at 74.75, which is a nice target for MTN. So let's be a little bit optimistic and assume that this cup and handle formation becomes a reality. The conservative target of this formation is the length of the cup, and keep in mind there can be multiple cups, right? Handles. There can be 3 or 4 handles. But let's take, assuming the first handle, it can take it back to around 84.53. Should the conservative target play out? If I take the full length of the cup and I project it upwards from where the neckline confirmed the formation, it can take it back to 106 Rand 51. And keep in mind, it doesn't mean it's going to happen in 2 months or 3 months. This pattern, this cup and handle formation, it hasn't even been confirmed yet, has already been built since the first week of March. George wanted us to look at Newell Brands, a consumer goods company listed in the US, and a beautiful graph that has also got a cup and handle formation on it, George. And if we look at the products that they serve, with so many people working from home at the moment, there's definitely products that can service that market. The first sign of strength, obviously, and the confirmation of my cup and handle formation will be above 17.94 Rand. I will be concerned about Newell Brands when 15.56 Rand changes into a resistance again. But take note, I've also got a window there, a gap there, that can act as a nice target for some upside. And that target is waiting at $20.46. At the moment, my 40-week moving average has changed into a support, and that is very, very optimistic. But also have a look here in the week in September until Feb 2020, there was this period where the share almost struggled to gain momentum above that 40-week moving average. It did keep it a support for a while, but then couldn't sustain it, and the sell-off happened. Now, if I go back further on the graph, you can see the last time Newell Brands kept the 40-week moving average of support was here again in April 2017 and again here in March 2016. And this year is really coming from some nice lows. My 40-week moving average is a support, and unfortunately my stochastic is a little bit toppish, and there's a divergence for some downside. So you might want to, if you don't own the share already, you might want to wait for a pullback first. See where this share finds support, wait for that bullish engulfing or dragonfly candle to confirm optimism, and then accumulate the share. But I think this graph looks beautiful for some possible upside, and that window there at the higher up is a nice target that you can keep in mind. Larry wanted us to look at Phillips 66. The ticker of this share is PSX, also listed on the New York Stock Exchange. I know one of the oil encounters everybody kept their eye on when the oil price declined as it did. At the moment, Larry, the momentum to the bottom is clearly in place. Yes, my share is oversold, but have a look there. My blue line within my stochastic is pointing downwards. It tells us there's not a positive divergence yet. We can see in the candles there's no positive candle yet, no bullish engulfing or harami or tweezer bottom. Nothing optimistic on the graph that can tell me that this is a turnaround, that the buyers are starting to protect the share. Now we can see here with this higher low, or some might call it even a tweezer bottom, that happened here in the week of the 16th of March and the week of the 23rd of March is a strong support, and that is waiting at $41.12 US. So I would assume that if the share continues back all the way at $41 and it finds support there, we might be sitting here with a massive double bottom. Should the share find support here, and the first sign of strength would be above $58.23. If Phillips 66 can start to consolidate above or find support above that level, then we might also be sitting here with another possible cup and handle formation. It's a massive handle, but I can only call it a double bottom when it comes all the way back to the support here found there around $41. I've got a window there also at the top, and that window is waiting at $99.37. A nice target for the share price for long-term investors. And have a look there. I just want to highlight this, and it comes back to time and time we've mentioned that triple tops, double tops, and head and shoulder formations should not be ignored. And this is another example that if a double top formation is visible on a weekly graph, that full formation can take the share price all the way back to the length of that head projected downwards. And we can see that in Phillips 66. Nobody probably believed that double top formation, but it just showed you that once that neckline that waited at $81 changed into a resistance, the selling just continued. Double tops, triple tops, and head and shoulders formations are warning formations that one should really take note of. Please feel free to send through your requests for next week's show. Have a fantastic evening. Take care.